We're having a really good year for stocks. The NASDAQ is up 33% if we look at the last year performance, which is excellent. I love seeing my stocks go up in value. As the stock market continues to go up consistently for 2 years, it becomes harder and harder to find another company to buy that I believe is going to go up in value. And what's also changed is if we look at the last year, especially, the Russell 2000 has really started to perform well. Small caps have really begun to spring into life. I think the election and the result with a Republican president taking the House and taking over the Senate is really going to bode well for small caps. So small cap stocks are just booming. Having said that, I'd like to present a small cap company in GCT and share with you what I'm seeing. This is Giga Cloud, and this little company, they provide the logistics for e-commerce for big products. So if you're buying a couch, if you're buying a bed, if you're buying a piece of furniture or something big that you can't put on a UPS truck or Amazon can't deliver in one of their vans, you depend on Giga Cloud to deliver that product. And I'm sure it takes some type of expertise, know-how of how to deliver these large items. The reality is that the world continues to just consume more and more online. We're buying our groceries. We're taking Uber rides. We're obviously buying on Amazon. The Christmas holidays coming, so we're buying more and more online. It's convenient. It's easy to price shop online. There's just a lot of advantages. So a place for Giga Cloud most definitely is very realistic. You think about the products that are being bought online and the need for a company to really handle logistics for a large product is really there. So I like that Giga Cloud is making themselves unique. Hey, we will do the logistics for large products. I like that about them. So overall, I like the business. They're a tiny cap company. We look at their market cap, it's a really small market cap at 1 billion. And their revenue is above their market cap. They're 1.11 billion, yet their market cap is less than that. They have a small PE ratio, which is interesting considering that when you look at Giga Cloud, you're looking at a company that has been growing quite fast. You look at the trailing 12 months, they're growing by 89%. Wow, that's boom. That's booming. Holy smokes. So I really like the growth, very high growth rate. If we look at the quarterly, they announced their earnings about a month ago, and they were growing at 70%. So all those things look really good. It's a small cap, maybe flying under the radar, so to speak. And I wanted to do a valuation on this stock and see where this stock ends up. I don't own any shares of Giga Cloud. At the conclusion of this video, I'll share with you whether I plan to buy more shares, or excuse me, if I plan to buy shares, or if I'm just going to continue to watch this stock. Looking at the past year, the stock is up 161%, but you can see it's had a pretty drastic pullback from its highs. Over the last month, it's down actually 1.81%. You can see that the stock is quite volatile. It is a micro cap. It's a small cap. So that tends to happen. Giga Cloud is a young company. It's a small company, but they're already producing free cash flow. I'm an investor that likes to invest in companies that produce free cash flow. The most desirable companies to me are companies that are growing and are growing their free cash flows quite quickly. Giga Cloud is already cash positive. In the trailing 12 months, if I take a look at that, the trailing 12 months and then add the growth rate of 15%, they're at $116 million of free cash flow. Keep in mind, their market cap is about 1 billion. So they're doing over 10% of free cash flow yield on the market cap, which is very, very good. They've shown that they're really growing. It really makes a lot of sense to me in the economy that we're operating in, that a company like Giga Cloud is just in high demand as companies sell more and more products online, especially these bigger products, and consumers want to buy them. Giga Cloud stands to continue to grow. They're also showing their profitability and their ability to show free cash flow. So that's very good. The intrinsic value that I get when I take a look at their cash flows and I set up a forecast of those cash flows based on a 15% growth rate in the first 4 years, then have a very modest, conservative growth rate after that, of 4% to set up terminal value. I go with a higher discount rate of 10%. Right now, interest rates are dropping. Like a Google, I would have at 7.5%. But since this is a micro cap, I go up to 10% just to be compensated for the additional risk I would potentially be taking on a small cap stock. So the intrinsic value of all those cash flows is $2.3 billion. They have cash on the balance sheet of $260 million, debt of $504 million. So I add cash, take away debt, and I get to an equity value of $2.1 billion. Market cap is well below that. In fact, if I look at the value of cash flows that I expect from this company and compare them to the market cap, the company is being discounted by 101%. That's a big discount. Earnings per share look great. Earnings per share for 2025 are expected to be $3.66. Give them a very modest 12, even though they're growing really well in e-commerce logistics. We'll give them a 12. Growth rate 15% on that earnings per share. So we get to a 98% discount. Overall, this is a stock that's being discounted by 100%. Very, very, very attractive company at a very nice discount. 3 analysts cover Giga Cloud. And coincidentally, they also believe the stock's being discounted by about 100%. So it's interesting that I do my own analysis. These analysts went about their way and they got to 101% discount. I'm at 100% discount. So interesting. The earnings per share look really healthy. And let's face it, e-commerce is just growing. So these guys should continue to grow their revenue and their profitability. So over time, they're going to grow real nicely and they're going to be more profitable in the future. Giga Cloud is an attractive business to me. The things that I like are that they have made themselves different. The uniqueness is that they only handle big products, and that's a necessity. They've become specialists in that area. So I really like that about them. They're a high growth company. They're growing the revenues very quickly, and they're profitable as they do so. They're generating very good free cash flow. I think they're a very good acquisition target. I think a bigger company could acquire them, bring them into their logistic business. Maybe one of these bigger logistics companies like a UPS or a FedEx or a Penske Logistics would acquire a company like this. All those things are just positive. Now, I don't believe that they have a moat that's super strong. It's a good moat. Their specialization, their ability to do so. Just not a very well-known company because they're tiny. So I put them around, the midway point of green and gray. Green being, if you're completely in the green in my quadrant of desirability, you have a strong moat. You're a Google, you're a Microsoft, and they're not quite that attractive, desirable. They have some aspects to being very attractive, but some aspects are just, they have competition. So it's a very good company with a very high discount. So I'm going to be buying shares of Giga Cloud. I'm going to take it slow. I think we're in an expensive market. I don't think I need to convince anybody of that. But I think as Giga Cloud has pullbacks, I'm going to be buying shares and holding these shares over time and maybe build a position of $5,000 to $10,000. That's a very small position where I have positions like in Meta over $200,000. And compared to Giga Cloud is a small investment. I could see myself buying year after year if the company keeps performing and growing and so forth. So that's my plan with Giga Cloud. As mentioned at the beginning of the video, it's really hard to find discounted stocks. We're in an expensive market, and looking in small caps and looking in different places is a good idea. Today's a Saturday. Today is November 23rd. And I probably looked at 6-7 companies before I decided to do a video on Giga Cloud. I thought it was kind of like the cream of the crop, although the crop was very, very small. And most of the companies that I looked at were being priced quite expensively. So that's my video on Giga Cloud. I hope you found it interesting. Keep in mind, I'm just an individual investor sharing my experience, my analysis. Please do not take anything that I'm sharing with you as financial advice or a recommendation to buy, hold, or sell Giga Cloud. With that, let me wish you the best of success in investing, and I appreciate you watching.